I'm joined again today by Paul Welch, CEO of Buccaneer Energy. Thanks for joining me again, Paul.
Oh, thanks for having me on. It's a pleasure to talk to you, Darren. Appreciate it.
No worries. So last time we spoke, plans were afoot for drilling the Fook prospect, and you've announced the spudding of the Alar number one well. Before we get into that, can you talk us through the rationale behind the recent fundraise that you've done, and why you did it now, and was it to sort of strengthen the balance sheet?
Okay. Yeah, so the fundraise we did just recently was kind of part two of a of a two-part plan for the development area around the Falk area. So the first part of it was to get the funding for the Falk 3 and 4, and the Falk 3 is now called the Aller number one. And then the
Mm,
second part of it was to get to order the long lead items associated with the Bitcoin mine. And the reason it was separated into two parts is that it took us literally months to get the Bitcoin plan approved by AIM. So, back in the summer when we were, needing to fund the long lead items for the wells, we were going to do the whole thing together, but AIM took too much time. And so we ended up just funding the wells, firstly, and then once AIM approved the Bitcoin mine, then we went to get the second round of funding again for the long lead items, because what we didn't want to do was drill these wells, have them ready to go, and then still have the issue that we're presented with today, which is the gas back pressure restricting the production of these wells. The reason that we're in the Bitcoin mining business or thinking about getting into it is
mm,
because when we looked at the production of these wells, we had a lot of gas production, and most parts of the field didn't have it. When we reduced the gas back pressure on the Falk number one well, the production doubled. And so that's the real driver for this Bitcoin, because we can't flare the gas. We know we have a gas issue at the Falk 2, and we expect to have one at the Aller number one. So when we took all that associated gas, put it into one spot, it was sufficient to drive a very small Bitcoin mine, essentially
mm.
not flare it, just burn it in a gas generator and provide power. And so that was the driver behind it. It really wasn't to be in the Bitcoin business. It was to be in the oil production business and to allow us to essentially double the production from the existing wells. And so that's the key. So it was, again, the second part of a two-part plan, which was cut in half because AIM regulation slowed us down. So that's why we did it recently. And again, the idea is to order the long lead items like generators, the hashers, and that sort of thing, for the Bitcoin, because we didn't want to get down there and keep talking about the plan. We wanted to execute on the plan. So that was the big driver of doing it now.
So that attaching this Bitcoin miner, so to speak, onto the well is actually solving a problem for you then.
It is solving a big problem. It's really restricting our production. So that's why we did it. And there's no gas
Mm,
infrastructure in the area. So it's a small amount of gas. There are no local pipelines. To lay a long pipeline for a small amount of gas doesn't make commercial sense. We would have a difficult time flaring it. At the moment, we're using a portion of it to kind of keep the stock tank levels flat and to keep the corrosion down. But there's only so much gas we need for that. So now we need to go to the next
mm,
solution. We looked around for a number of solutions, and this Bitcoin mine option came up. Now, ideally for us, we would just take the gas, have a generator, put the power out there, and then have a Bitcoin miner come in and start mining the Bitcoin. And we would just essentially be a power seller to them.
mm, mm.
However, it'll depend. It's a relatively small mine. It's not very expensive. And so, if we have to go all the way down that food chain, we'll do it. But, we wanted the flexibility to decide where we should stop. And it's going to be driven by the commercial decisions and what we can negotiate. So in Texas, onshore Texas, since 2022, Bitcoin mining has been prevalent. And so there's lots of service companies around that allow us, to get whatever part of the chain that we need to get into. So that's the driver behind it. It's really to increase oil production.
Yeah,
Having said that, the revenue stream isn't bad, but again, the real driver is oil production.
yeah. Okay. Well, obviously, since the fundraise, there's been some downward pressure on the share price. Given the drop, what would you say to shareholders about the underlying strength of the business and the long-term opportunity?
Well, the strength of the business hasn't changed. From the time we did the raise in August, the share price had moved up nicely. I think, as you can testify here, we kind of changed our engagement with the shareholders. We went to a much more social media focused, different platforms to get the message out. We think it's working. The issue with the share price is, basically one of our brokers let us down. We expected that we would do this closer to market. I think people were a little upset at the discount. We were very upset at the discount. But again, for us, it was important to get the funding so that we can execute on this mine when we need to and not have to delay it. And so yeah, we understand the downward pressure on the price. We're going to continue to work hard to address that, but it's an unfortunate byproduct of the raise that we did now, and we are concerned about it.
Yeah, and probably sort of partly a byproduct of the liquidity in the market at the moment as well. Okay, thanks for that. So the LR1 number one well then, as you announced, has been spudded. Can you give us an update on the progress there and what investors should be looking out for near term?
Okay, so we spud the well last weekend. It's going to take about between 10 and 14 days to get to TD and evaluate it. We're making good progress. What we anticipate from this well is we're going to encounter the reservoir section similar to what we saw in the Falc 1 and the Falc 2, about 20 or 30 feet of pay, produce at the maximum field allowable rate, which is 120 barrels a day. That allows us to net 40 because we're a one-third partner in this.
Hmm.
That 40 barrels a day is worth, $55,000 a month in cash flow to us, right? And that's the real driver here is that these wells pay out in under 6 months, and they provide a tremendous amount of cash, because our onshore, our operating costs onshore Texas in this particular area, because we make very little water, are like less than $5 a barrel. So it's really important to get this thing down and on production soon because we can generate, again, at $60 of oil, another $55,000 a month in free cash flow. So that's the real driver. And the other part of it too is that success here sets us up for success potentially in the Falc 4, the next well to the north, and then also the Bitcoin mine that we discussed as well. So, if we look at a successful Falc 4, a successful LR1, and then the Bitcoin mine up and running, those three pieces of business combined are again at current prices another $175,000 per month in revenue. So that's why this well is important. It kind of unlocks the door to a lot more cash flow. And these are the type of things that we need. We need to generate cash. The oil price is low, so we need to increase our production. We've already cut our costs, so we have to drive the volume here, and that's the driver behind the first of this well, and also the rest of the plans in the area.
Yeah, I mean, you partially answered this question, but I was going to ask you how significant success at this well would be for the company, in your portfolio. And obviously, it sounds like it would be significant. What would
It's
you
kind of
be?
the it's
Yeah,
it's kind of the key that unlocks the door. So we have the area that we've developed in this part of the field is kind of in the southern part of it. We've identified two locations to the north. So this Falc 3 or the Aller number one, is the first one of two wells that opens up this reservoir to the north. Now there is potential for that to continue, further up north than we think because it's bounded by a particular fault. But that will be determined by this. So it's really it's kind of the first step in a multi-step process, and so we're happy to finally have it underway.
hmm, okay. Well, you mentioned previously about the Bitcoin side of things as well. We know it's not there for gimmick reasons. Obviously, it can generate revenue, but it's actually there to solve a problem as well. How important is this to your sort of integrated sort of strategy, if you like? How does the model sort of differentiate you from other sort of traditional energy companies, and why is it an important part of your growth story?
So it's important for us because it allows us to increase oil production, one, firstly, and then secondly, it gives us a new revenue stream from something that would have been a waste product, right? So we get, our revenue is driven by the oil and gas prices, as most E&Ps are, or almost all E&Ps are. The Bitcoin revenue stream is from a product that is not linked to the oil price, right? So Bitcoin prices have done what they've done over the last,
Hmm.
5 or 6 years. It's gone up, pretty steadily. We can make money in a Bitcoin mine down to about, I think, $30,000 a coin. So we're very low operating cost in here because essentially the energy is almost free putting into it.
Yeah.
So for us, it's just another revenue stream that's kind of diversifies us away from simply being, an oil and gas derived revenue company, However, it does give us an advantage in that we can go to what I have described in the past as kind of unloved areas, areas that have some oil production but a lot of gas. And so you can't really maximize your oil production because you have a lot of associated gas. The Railroad Commission is cracking down on flaring. It's also not a great idea. And so for us, it gives us kind of another tool in the toolkit that we can go to in some unloved areas, get assets at a relatively reasonable price, and generate some revenue from them that perhaps other people wouldn't. So it's another tool in our toolkit, but it's just something, a means to an end, just like a new technology would be. It allows us to do something that you couldn't do in the past, and it provides, again, here we would get about $65,000 a month once that Bitcoin mine is up and running. So it's not, negligible. It's important, but it really solves the problem. And the problem is this back pressure on these wells from gas that's evolved from the reservoir as the pressure has dropped. So it's solving a problem and also providing a revenue stream. So for us, it's really a win-win.
Okay. I mean, I know it's not easy to give firm timescales and what have you, but I mean, you've spudded the well. Do you have a time frame for when you think you might have a result on that? And then if you have a successful result, will you how quickly could you, for example, get that production going and then the Bitcoin miner going, and then actually think, well, we'll now start looking at the next, the
Right.
next drill and
Right. So the time frame at the moment is the well spud last week. It's
mm.
it's gonna be about 10 to 14 days before we know the results. So we expect early part of next week that we would have something, unless we have some drilling problems, which we haven't had yet.
Mm.
So that's what we anticipate for this well. Given success, then we would have this well on in about 3 weeks' time after that,
Oh,
because again,
okay.
we're really close to all the existing infrastructure. We just have to complete it, move in a pumping unit, set some stock tanks, and go. We have most of that equipment available in the field already, so I think we could do it relatively quickly. With regard to the Bitcoin mine, that is something we intend to do kind of late in the first quarter. The idea that by raising the money here is that it allows us to get in the queue to order some long lead items
Yeah.
for the Bitcoin mine so we can start that up. But that is going to be more of a first quarter and towards the end of the first quarter kind of operation. The other question is the next well. The next well is still a discussion between ourselves and our partner. Our partner is waiting to see, what happens on this well, which is, what we should be doing. But we expect that that would be early the first quarter. So either late December spud, January TD, or January spud, and early January spud, and then January TD. So
Mm.
so again, given success, we expect everything to be up and running by the end of the first quarter, 2026.
Yeah. So the potential then, from 3 or 4 weeks' time to be, adding that bottom line revenue that we were talking about earlier.
Yeah.
Yeah.
Yeah, given success, I would expect in a month's time that we would be up and running and generating that cash for sure.
Mm. Excellent. All right. Well, exciting times. Thanks for joining me again today, Paul. And hopefully you'll come back and talk to us again in the near future.
I'd love to talk to you after the success of the hour number one. So just mark that on your calendar, and I'll
Yeah.
ring you next week. So again,
Okay.
thanks
All
very
right.
much.
Lovely. Thanks, Paul.